on Australia's business channel. This is Mediaweek.
Hello and welcome to the program. Ahead, Foxtel details its London Olympics coverage. News Limited and Fairfax still trading barbs. And the Logies controversy. What does it mean for future ceremonies? But first, a week in politics is a long time, and the same goes for TV. Heading into the restart of ratings, Seven was supremely confident of continuing its golden run. But that was before Nine's The Voice hit TV screens. Well, to tell us whether this is a game changer in the battle for viewers and ad revenue, we're joined by our co-host, James Manning, the editor and publisher of Mediaweek, this week from Melbourne. James, great to see you there. Thanks for joining us as always. Well, just firstly, tell us about The Voice, the numbers it's been getting, and whether anybody expected that the show would perform this well.
Yeah, look, there was certainly an expectation that it would do well, just as how well. It's probably the double the sort of lower end that Nine would have been looking for. Look, the show's #1 in the UK this week. It's probably NBC's only real primetime hit in the US, so they certainly would have been expecting good things. 3 nights over 2 million, though. It's a pretty amazing start. How amazing. Probably one of the best shows ever to launch on Australian television. First 3 nights over 2 million. I can't remember another show that's done that. Somebody might find one, but there haven't been many of them.
It obviously is a massive boost for Nine. Early days, of course, but there are also implications for all of the associated brands and businesses as well. How do they all benefit too?
Yeah, of course, the biggest impact is going to be across the rest of the Nine schedule, because suddenly you've got a program you can start advertising your other shows in. So, you know, your promos for all your other shows are now going to get an audience of 2 million people, something that hasn't happened this year for Nine, and something that Seven took great advantage of with My Kitchen Rules. It's also great news for Shine Australia, the producers of the program for Nine. You know, they had a bit of a challenged year last year. People only remember your big flops and your big hits, and last year people will remember Renovators sort of underperformed for Shine and for 10, but this year people are going to remember The Voice, of course, and everybody associated with it. It's great news for the coaches on the program too. Keith Urban's got a #1 album this week, so great payoff for him. I think it's #1 on iTunes. Seal's sort of touring live. You can expect if his shows haven't been selling out, they probably will now. And you know, Delta definitely wants to get back into the mainstream music the position she used to occupy, and this will be a fantastic platform to launch that. And finally, maybe Universal Music. You know, I think they did a global deal for The Voice. They get the rights to release the material of anybody from this program they think has an ongoing music career.
We did hear Seven's David Leckie being very confident going into the Easter ratings break. Some of the headlines, I think, 7, 8, 9 and 10 from what I remember. What does this mean then? Obviously, we've still got a few days left on the ratings week, but is there a chance that Nine actually could claim the ratings week?
Yeah, look, I think after 4 nights, they've got a lead of 10 points. The Seven always does well on a Friday and a Saturday because of their AFL in the southern states. But, you know, if you stick your neck out and you think, look, Nine should win this week, but it's not a done deal yet. Is Seven out of the picture? Certainly not. You know, they've still got a lot of good shows. I mean, Australia's Got Talent got knocked about this week, but on a Wednesday night, it's not up head-to-head with The Voice. So it did very well, nearly 1.4 million people. So they've still got a lot of good properties, but they expect them to suffer some pain, though, when they go head-to-head with The Voice.
Back to the rest of the ratings story a little later in the program, but just sticking with music and consumers' love of accessing music online. Certainly it's a real battleground for media companies, and not just through iTunes. We're also seeing huge growth in subscription digital music streaming in Australia, with Spotify launching and Telstra offering its own product with US company MOG. But what about the online music video market? MCM Media has announced that it's partnering with music video platform VEVO to launch here in Australia this week. To tell us more about this part of the market, we're joined now by Simon Joyce, the CEO of MCM Media. Simon, thank you so much for your time. Just firstly, tell us a little bit about the VEVO platform and what exactly it is.
Look, VEVO is the world's biggest online video platform. So very simply, it's about giving access to consumers to premium music videos on demand. And when I say access, it's mobile, it's tablet, it's IPTV.
And I mean, looking at the huge growth that we've been seeing as well in both online advertising and also, of course, consumers accessing music in particular, it's a huge market, isn't it?
Look, if you look at online, 9 of the top 10 all-time online video plays are music. So, I mean, where else do you find 4 minutes of content that people are so passionate about that you can access on demand? So, from an advertising point of view, it's a pretty impressive offering. You can get people when they're really, really engaged alongside the music they love.
I know James has got some questions for you too about the VEVO platform too.
Yeah, Simon, you used the word premium then in your sort of, when you're describing VEVO. It makes you think it's going to be a charged for service. Is there a cost to the consumer?
Look, I mean, nothing's for free, James, but the cost to the consumer is one targeted commercial every 7 minutes. So if you look at that over an hour, that's about an hour of content versus 4 minutes of advertising. And we think that's a pretty fair value exchange. And importantly, given the data power of digital, that ad should be very, very targeted.
Tell us about the opportunities for advertisers.
Okay, so the advertiser, it's clutter-free. It's predominantly online video ads, and if you look at the online video market right now, I guess the real highlight the online market in general, the real highlight is video advertising. The IAB forecasts 100% growth each year for the next 2 years for online video advertising. And, I think advertisers in general are right now saying, hang on, we need to complement our TV buy with online video advertising. So when it comes to VEVO, you consume 7 minutes of music video content, and then you agree to one 15 or 30-second commercial.
Simon, a division of MCM recently announced a deal with JV with Microsoft, also in that video space. Tell us about that. And you seem to be betting pretty heavily on web-delivered video.
Yeah, we are. Look, Mo Video is one of the subsidiaries of the MCM Entertainment Group, which is a listed business. So Mo Video is a world-class online video player. Its focus is on helping people monetise their digital video assets. So Microsoft is a storage platform. It's a cloud system, and for them to partner with Mo Video was a real insight into the quality of Mo Video as a product.
Who do you see as your greatest competitor? Because, we've been hearing obviously about different offerings for consumers. There's the subscription music streaming side of things, which obviously is separate to this. But who do you see as your biggest competitor? Is it YouTube? Is it iTunes?
Look, firstly, the subscription stuff, we welcome, whether it's Spotify or whether it's Mog with Telstra. The good thing here is more consumers are having access to music out of the cloud, more access on demand. Now, their model's audio-based, but I think the consumers are at the point where they're starting to understand streaming. In the old days, in fact, I'd say if you look at it now, there's two very distinct consumers. There's those that still have to own anything. In the old days, they'd have CDs piled up to the ceiling. Now they might have gigabytes and gigabytes of iTunes stored. And now this new generation's coming through and they're saying, well, it's actually all about access. If I can get whatever I like, whenever I want it and how I want it, as opposed to owning it, well then, yeah, that could work for them.
Simon, we're talking about start-up businesses here, but just give us some background. What are MCM's bread and butter businesses, and can you sort of use some of those audiences to help grow your new ventures?
Yeah, look at MCM Media. So we're an ad-funded content production company. We specialise in radio, digital, television and events. And our model to the advertiser is we get all those mediums working together, usually on a brand-funded basis. So they'll continue to cross-pollinate. As far as the other two businesses go, you've got Igloo, which is a web design business, and then you've got Mo Video. If you can have a content business sitting alongside a technology business, which is a digital technology business, then sitting alongside a digital design business, which is all about intuitive design, we think there's a wonderful opportunity there in those three business units working together. And with this huge push to digital, that's exactly what's happening now.
Just on the Igloo business, how's it changing? Is it in the app business?
Look, as far as Igloo goes, I think the biggest change is socially, how their sites connect socially, and also their focus on mobile. I think right now we're at a tipping point in this country where most marketers are sort of sitting back and going, hang on, mobile is going to be critical moving forward. We see mobile as a number one digital player in a couple of years' time. The increase in smartphone penetration is extraordinary the last couple of years. It's going to continue that way. So I think a lot of marketers are sort of sitting there going, now, hang on, we've got to take our mobile strategy very seriously. And for Igloo, as a digital design business, that's a key part of our offering.
Simon, that some people are speculating that Apple's probably developing the iPad to replace a lot of the PC business, even laptops perhaps, outside of an office application perhaps. Can you see that mobile and tablet business replacing a lot of PCs?
I don't know if replace is the right word. I think we'll have a different relationship with each of those devices. But we do see, look, from our point of view in music video streaming, I think from a mobile perspective, from a tablet perspective, the scale you're going to get there will surpass desktop over a period of time. If you look at VEVO in the UK as an example, you know, they're sort of 9 months into their launch. They're doing about nearly 200 million video streams a month from mobile. And if you think of that a couple of years ago, I mean, it's an extraordinary change. So, yeah, we see them, for entertainment content, becoming a dominant play.
Just looking at the NBN, how critical is that going to be too for your business here?
Look, you know, we just can't wait for it. The more people that are well and truly engaged on a high quality broadband, the better the video offering is. And whether that's IPTV, whether it's tablet, it is, yeah, it's well and truly we're excited about, I guess.
Simon, that Foxtel announced this week that Andrew Gunsberg's returning to Australia to work on a show for them. I think he partners with you on one or two programs.
Yep.
What's going to happen to them?
No, he'll continue on. So he does the Hot Hits live from LA. That's played on the Today network around the country and about 70 odd regional stations. He'll continue hosting that while he's here. That currently comes out of LA, of course, but while he's here, we'll host out of Sydney. So yeah, that's a nice partnership, and no doubt we'll look to work closely with that show.
Simon, great to talk to you today. Thanks so much for coming on the program.
Thanks for having me.
Simon Joyce, CEO of MCM Entertainment. Now for a check on the media sector's performance on the share market this week, here's Chris Weston from IG Markets.
Yeah, good afternoon. I mean, global markets seem to be bouncing around at the moment, but our media companies seem to be doing pretty well on average. I mean, some of the price action is very encouraging. We can first take a look at Consolidated Media, ticker code CMJ. I mean, since the 11th of April, it's been in a bit of a sideways trade, but it's doing very well year to date. It's up 22%. We probably want to see it break through the recent highs of $3.20 to get the uptrend going again. And I think, you know, the sort of more optimistic brokers are looking for around $3.27 on a 12-month projection. So probably at these levels is looking a little bit lofty. Otherwise, you've got Southern Cross Media doing very well, the best performer in the media space, up 30% year to date. You've got APN and Seven West Media, two stocks which have been beaten up heavily in 2011, doing very well. APN up 20%, Seven West Media up 17%. Probably a lot of short covering coming through after, you know, as I say, a very bad year last year. Seven West pulling back from $4, big rejection of that level, pulling back down to where it is at the moment, around $3.81. I think the buying really comes in around $3.58, which is the 22nd of March pivot low. I think that's probably where the value comes in, and we'll probably see it well supported there. Elsewhere, Telstra, not a media company per se, but obviously we know it's got media assets. That's got an investor briefing today. We've just seen that. A little bit disappointing. I think the stock's down about 1% at the moment. I think the stock prior to the open was trading at $3.36. Now, given the EPS assumptions, puts it on we'll put it on 11.7 times forward earnings, which I suppose is relatively fair value. A lot of brokers were looking for around $3.45 on a 12-month projection, so at $3.36 was pricing a lot of good news. The fact of the matter is the company have come out and said that they will probably generate around $2 to $3 billion of free cash flow over the next 3 years, which is great. Huge amounts of cash, but they're not actually going to come out, and they've said that they're not going to do a buyback anytime soon. They've also said that they probably won't be able to do a progressive or increase the dividend at the moment because of a lack of franking credits until at least 2014, and I think there were certainly disappointment amongst investors. Some people were positioned for a statement from Mr. Fodey suggesting that they were going to do both of those side of things. So probably a little bit of disappointment. Certainly doesn't change the investment case for Telstra. They've got a very strong dividend policy which will increase over 2014 in my mind, and they've come out with a 5-point plan which all shareholders should certainly have a look at, mostly around the balance sheet, mostly around their dividend policy, but yeah, probably a little bit disappointment today. I'd probably look for a bit of weakness in the stock to be as a potential buying opportunity.
Stay with us. Coming up on Media Week, how will the leaking of the gold Logie winner's name change the ceremony in the future?